Welcome back to Algobot, the channel where we open up automated trading strategies and study exactly how they think. I'm your host, Algobot, and today we are dissecting an expert advisor for MetaTrader 5 called Breaker Block Reversal. This one is pure price action. There are no moving averages, no oscillators, not a single indicator anywhere in the code. Instead, it reads raw candle structure the way an ICT trader does, by tracking liquidity sweeps, market structure shifts, and order blocks that flip their polarity. By the end of this video, you will understand what a breaker block actually is, how the strategy hunts for one, and exactly when it decides to pull the trigger. Let's dive in. So what does this expert advisor actually do? Breaker block reversal is a counter-trend, or reversal, system grounded in the ICT school of price action. Unlike a continuation strategy that simply follows momentum, this EA waits for the market to trap a group of traders and then trades against that trapped crowd. The entire engine runs on candle geometry alone. It measures swing highs and swing lows, it watches for stop runs, and it studies the bodies of individual candles. No external indicator feeds it a signal. The heart of the strategy is the breaker block. To understand it, first picture an ordinary order block, which is the candle at the origin of a strong, impulsive move. A breaker is an order block that failed. Price reaches beyond a prior swing to grab the resting liquidity. That push fails, and then the market shifts structure in the opposite direction. The order block that was supposed to extend the failed move is now violated, and it flips polarity. Old supply becomes fresh demand, and old demand becomes fresh supply. Price very often retraces back into that flipped zone before the new direction runs, and the retest of that zone is precisely what this EA trades. Because it relies only on raw price, the strategy is symbol agnostic. You can apply it to foreign exchange pairs, indices, metals, or any liquid instrument that respects structure. It is designed for the patient, structure-minded trader rather than the scalper who wants constant action. Setups are selective. The EA holds only one position at a time per magic number, and every trade carries a clearly defined stop placed beyond the swept extreme. Remember, this is educational content meant to explain how the logic works, not a promise of any particular result. Let's walk through the exact logic, step by step. The EA works once per closed bar, so it never reacts to the noise of a still-forming candle. On each new bar, it first looks for a freshly confirmed fractal pivot, using the pivot input as the half width. A swing high needs that many higher free bars on each side, and a swing low needs the mirror of that. Consider the bullish case. Step 1 is the sweep. A new swing low must print below the prior swing low, which means the resting sell-side liquidity beneath the old low has been taken. The moment that happens, the strategy arms a bullish setup. To build the zone, it searches backward from the swept low, up to OB search bars candles, and grabs the last up candle of that leg. That up candle is the failed bearish order block, and its high and low become the breaker zone. Step 2 is the structure shift. Once armed, the EA waits for a candle to close above the swing high that preceded the sweep. That close is the market structure shift, and it flips the setup to active. If price instead closes back below the swept low, the reversal idea is dead and the setup is discarded. If the shift never arrives within max arm bars, the setup also times out. Step 3 is the entry. With the setup active, the EA waits for price to retrace down into the breaker zone while still holding above it. Concretely, the latest candle's low must dip into the zone, and its close must stay at or above the zone floor. When that retest prints, the strategy buys at the ask. The stop loss is placed just beyond the swept low, offset by StopBufferPoints. The distance from entry to that stop is the risk, and the take profit is set at the risk-reward multiple of that risk, by default 2.5 times. If price never returns within max active bars, the setup expires untouched. The bearish case is the exact mirror. A swing high sweeps the prior swing high. A close below the preceding swing low confirms the downside shift. The last down candle becomes the breaker, and the EA sells the retest with its stop above the swept high. Only one position runs at a time, keeping risk clean and contained. Let's read this the way you would inside Meta Editor. At the top are the inputs that shape every decision. Pivot is the half width of a fractal swing. Raise it and you demand bigger, cleaner swings, which gives you fewer but more significant levels. Ob search bars controls how far back the EA looks to find the order block candle that becomes the breaker zone. Max arm bars and max active bars are patience dials. The first limits how long the strategy waits for the structure shift after a sweep, and the second limits how long it waits for the retrace after that shift. StopBufferPoints adds a small cushion beyond the swept extreme, so a marginal wick does not stop you out prematurely. RiskReward sets the target as a multiple of risk, and lots is the fixed trade size. Now the entry block. The first line checks three things. The bullish setup must be in the active phase, meaning the sweep and the structure shift have already happened. The bar count must be greater than the stamp, so we never enter on the very same bar the shift confirmed. And the candle must actually touch the zone, where the low dips at or below the zone high, while the close holds at or above the zone low. When all of that is true, entry is read from the current ask price. The stop is the swept level minus the buffer. Risk is simply entry minus stop, and only if that risk is positive does the EA proceed. Take profit is entry plus risk reward times that risk. Finally, send order fires the buy. The bearish path, not shown here, is the perfect mirror of this logic. Let's watch this play out on the chart. Notice there is no oscillator panel here because the strategy reads structure, not an indicator. On the left, price drifts down and prints an old swing low, the gray dashed line, where sell-side liquidity is resting. Just before that, an up candle leaves behind the green band, our bullish breaker zone. Then watch candle 5. Price stabs below the old low, sweeping the stops beneath it. That is the liquidity grab, and it marks the sweep low that will anchor our stop. The next candle reverses hard and closes back above the prior swing high. That close is the market structure shift, and the setup is now active. On candle 7, price retraces gently down into the green breaker zone and holds. The buy entry triggers right there, with the stop tucked just under the swept low. From there, price lifts away and reaches the take profit at the predefined reward multiple. Now the mirror image plays out on the right. Price pushes higher and prints an old swing high, the upper gray line, where buy-side liquidity sits. A down candle leaves the red band, our bearish breaker zone. On candle 13, price spikes above that old high and sweeps the stops, then immediately closes below the prior swing low to confirm a downside shift. When price rallies back up into the red zone but fails to hold, the sell entry fires, with the stop placed above the swept high. Price then rolls over and slides into its take profit. Two clean, structure-defined reversals, each built on a trap and a shift. This is for educational purposes only, and that is breaker block reversal from front to back. We covered what a breaker block is, the failed order block that flips polarity after a liquidity sweep and a market structure shift. We walked through the 4 stages the EA looks for: the sweep, the arm, the shift, and the retest, and we read the actual MQL5 code that turns those rules into a buy or a sell, complete with a structure-based stop and a fixed reward-to-risk target. Remember, everything here is educational content designed to help you understand how the logic works. It is not financial advice, and it is not a signal to trade. If you found this breakdown useful, please hit the like button, subscribe for more MetaTrader 5 strategy analyses, and drop a comment telling me which strategy you would like me to dissect next. You will find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.